right, you guys, let's go ahead and get started. Welcome to our YIS online club meeting today. Today, we're going to be going over Unit 7, Lesson 3 activity. We're going to be doing creating your own investment checklist. And today I have with us David from Texas. David sits on our student advisory board, and he's also our student director of social media. So great to have you, David.
Yeah, it's great to see everyone that's here. Okay, so hi everyone. So my name is David Borna. I am from Houston, Texas. And today we're going to be going over an investment thesis checklist. And so first, to break the ice, I just really wanted to talk about current events in the stock market that are happening. So as you guys know, I think it's been all over the news. There's a massive cargo ship that has basically caused all traffic in the Suez Canal to come to a standstill. And so what does that mean for the stock market? That means that oil prices, especially for companies in the US or located in the US, have jumped 5% because the Suez Canal is one of the prime waterways to connect the Middle East to the rest of the world and transport oil. And so there's a shortage of oil right now. And so we're seeing a massive spike in oil prices throughout the stock market. Now, something else that's happening in the stock market that happened today and yesterday was that cruise ship stocks have tanked. And this is because of CDC guidelines, which have continued the conditional sailing order, which basically means that cruise ships from the United States are unable to currently take on passengers. And so the cruise ships have been trying to fight this order, and they've gone to court. And the courts have upheld the CDC's ruling that the conditional sailing order stays. And so again, we're going to see a large downward spiral for cruise ship stocks because again, they're not going to be able to operate at least currently for the next 6 months. So that's something to look out on. And again, if you really feel that cruise ships can come back from this is a great time to really buy the dip in the stock market, because I think cruise ship stocks have fallen by 5%. And then lastly, another trend that we're seeing in the stock market is that airline stocks are on the rise. So airline stocks fell today currently by 5%, but I know that in the past 3 months, airline stocks such as American Airlines are up 60% from their yearly lows. And so with the vaccination effort and as more Americans get vaccinated, we're going to see an uptick in air travel. And on March 14th, we recorded the strongest 1.34 million people in the United States traveled with planes in the United States. And so again, we're seeing a massive uptick in the number of travelers. Again, we're not reaching pre-pandemic levels, but again, airline stocks also reflect that they are not at pre-pandemic levels yet. And so airline stocks are still a buy. And with the vaccination effort, with the Biden administration trying to have available doses for every adult American citizen by May 1st, we should really see airline travel start to increase, and again, the stocks to reflect that increase. And so now we're going to be going to our case study. And so an investment thesis checklist is important because it makes you realize whether a stock is truly worth it. You basically have to create a series or a list of questions that you have to ask yourself on the stock. And these list of questions, if the stock market goes down, or if the stock continues to fall, you have to ask yourself whether you were correct on these 3 questions or not. And so again, this means that you have to be confident with your choice and where you're putting your money and investing in. And so here we have the case study of the YIS founder, James Fletcher. And so he created an investment thesis for this company from South Korea in 2007. And so the company had 2 prime factors that really led them to invest in this company. And one was that they had a high network cost. That means that the more kids played the game, the more attractive the game became. And so again, it caused more people to gravitate towards the game. And then there was the high switching cost. These games, as people just continue to level up, became virtually unlikely that a customer will switch to another video game. And so these 2 games basically meant that the company had a competitive moat which is one question that you have to ask yourself in an investment thesis, is if the company has a competitive moat that distinguishes itself from the competition. And so James Fletcher, he went ahead and invested in this company. And one thing that happened was, and he asked himself these three questions, and he had these three factors: that the existing games would continue to retain their loyal user base and pay handsome returns, and that even though the video game industry was hit or miss, the development team would eventually get a very successful video game, and they were due for that. So that's why the stock was so low, was because they had not had a very successful video game in a long time. And lastly, he said that the current stock price implied no probability to a new game's success. And so they invested in the company. And what happened was that they came out with this game that had substantial buzz. Everyone was talking about it, and then it flopped. And because that game flopped, the company's stock also flopped with it. And so again, James Fletcher, he had to go back to his investment thesis, and he had to ask himself these three questions. Did the company still have a sticky, loyal user base on existing games? And was this is a yes or no question? And he said yes. Was the development team still likely to have a hit game in the future? And that was yes. And was the stock undervalued? And it was still yes. And so again, with an investment thesis, you have to ask yourself questions with a yes or no answer. A yes means that you can still continue to invest in that stock or keep or retain your position in that stock. A no means that you should probably sell that stock and sell at whatever position that you currently have. And so because all of these questions answered yes, James is confident in his choice to continue their position in the stock. In fact, they even reinvested in the stock and invested more money. And so again, in 2008, the company launched another game, and the game hit the shelves, and again, another flop. And so the company, again, shares fell, and they plummeted by 40%. And so, of course, James's portfolio and their clients began to notice this poor performance. And so James had to make the decision whether he should sell his stock at a loss or stick with the company. And again, this investment thesis checklist gave him the assurance to continue sticking with the South Korean company. And so they had the audacity to add to their position. And so not one thing changed from their original investment thesis, except that the stock price looked a whole lot more attractive than it ever had. And so they just reinvested in it. And so then the following year, the company, which was basically almost ignored by other investors, came out with another game that was a blockbuster in South Korea and in China. And the stock price shot through the roof. And then 2 years later, the company had another successful game. And James's initial investment had a 500% return, which is a truly amazing return. And so, again, basically the key to James's success was that he had established an investment thesis, and he stayed true to that investment thesis. And that gave him the courage to continue going even when others were not so sure. The investment checklist was created or developed by Monishi Pabri, who is a famed investor whose company has made 517% of returns compared to the S&P 500. And so we're going to be watching a video by Pabri. And so this is the video. And again, he basically established this idea of a company or investment checklist. And so this is the video. Hopefully,
Morningstar's tools can help make quick.
I'm Jason Stipp from Morningstar. We're reporting from the Value Investing Congress in Pasadena, and I'm here with Monish Pabrai from the Pabrai Investment Funds. He talked today about the use of checklists in an investment process, and he's going to tell us a little bit about that. Thanks for joining me, Monish.
Jason, great to be here.
So the first question for you, you went through some examples of some industries where checklists have become critical, and I think that you're sort of implying that you started some of your research about checklists there. What did you find in those industries, and what did you learn about how checklists were employed there?
Well, what I found is that they had profound before and after impacts. Life-altering impacts. So, for example, in aviation, extremely unsafe to extremely safe, without much of a price being paid. The same with medicine. where the basic stuff, the most important things I learned was that when you look back at investing mistakes or surgery mistakes or aviation mistakes, the cause is elementary, and the cause could have been prevented kind of a priori.
So, and it seems like one of the key things that sort of went across all the checklists was this idea of mistakes. So the checklist was born out of mistakes. So how important is that when you're thinking about building a checklist?
Yeah, I think mistakes is the best way, like the FAA does with aviation. I think it's a very powerful way because it means that, especially if you look at mistakes of the greats, it means that there was a great mind. It could be Warren Buffett, it could be John Templeton. It was a great mind that missed something elementary. And so one should ask, why did that happen?
And so you actually, tell me a little bit about the process of building this checklist. So, it's a great to think, let's sort of think about people's mistakes, but you're actually going out and looking at, past reports from some funds and compiling these mistakes. How is that process working?
The processes work great. I did what I would call a quick first pass, where I've got about, 80 positions that my stocks and other people's stocks where they had mistakes. But I think I've only scratched the surface. So for example, I'd love to, in fact, I'm going to do it this summer with the help of an intern. I'd like to look at Longleaf Partners or Third Avenue and look at all their mistakes over the last 20 odd years. And so first create the list of the mistakes. The second part, which is a little more difficult, is to reverse engineer what happened. Sure. In some cases, the Longleafs and Third Avenues have talked about it. So you can go to the letters and look at it. In other cases, they haven't. It has never been publicly talked about. So those will be a little harder to figure out.
About how many items do you have on your checklist?
There's about 80 items currently.
And so, do you find that that size of a checklist that, you can get bogged down in that, or how long does it take you to?
It actually goes very fast. I think running the checklist takes about half an hour.
And your checklist, is it something that other people could use, or how is it employed? I mean, how personal is the checklist?
Yeah, I think if I were to publish it, it would be of some use, but I think a person would get the most value if they built their own, because I think it would just get seared into their psyche better, and they would take it more seriously.
There's just some things that you as a person, you need that checklist.
That's right. Yes, that's right. I mean, I think each of us is wired differently, and we're going to look at things differently. So. And
have you credited your own checklist with saving you from a few mistakes since you?
I think it's been fundamental.
Very useful tips for investors, and hopefully they can go out and make their own checklists as well. Thanks for joining, Manish.
Thank you. All right, great.
Great. So as you can see, checklists are key to basically helping you prevent mistakes, and also checklists are key to realizing characteristics of successful companies and really what questions you must ask when you're about to invest in a company. And so what I also like that goes with what are red flags in investing that you want to make sure that you avoid. And so these are some of the investment checklists that he personally, the person in the YouTube video, recommends. And that is, do I understand what is moving the stock price, what the market is pricing in, and where my view may be different? And it's also, do I understand how the company earns money? So that's key, because you have to realize where that revenue stream is coming from. And as well, you have to know, does the company have a clear competitive moat? And so you have to realize what makes this company different from all its other competitors? What makes it likely to succeed? And so that's the question that you really have to ask yourself. And then lastly, have I reached the investment conclusion on my own and believe that even if people that like the stock now reverse their opinion, it wouldn't sway me? And so this is what happened with James Fletcher. Everyone was selling his stock, and due to the investment checklist, he stayed, even though everyone else had abandoned the stock and believed that the stock would just continue a downward spiral. And so now this is an investment checklist which I made. And then afterwards, I have an example of a company that I did an investment checklist for, and which actually I used in the YIS Global Stock Pitch competition, which is coming up. And so this is a checklist that I have. And so number one, is this business understandable? Do you know what's happening in this business? Do you know how this business operates? Is this business familiar to you? And so, do you know how the money is made? Do you know, again, where the company is getting revenue streams from? Do you know if this is going to be a continued revenue stream in the future? And do you know, does the business have a consistent operating history? Does the company have a long history of being successful or have consistent revenue streams? or has a history of being able to weather basically just downturns in business and just have weathering crisis, because that's something that's very good in a company, which presents a strong investment thesis. And then, does the company have favorable long-term prospects? So basically, this also means, has the company evolved to meet current market conditions, and does it have the capacity to evolve in the future to meet changing market conditions? And does it have in the pipeline projects that will allow it to continue to expand in the future? And then this is one of the most important questions, is does the company have a strong moat? And this is something that sets it aside from all of its competitors and makes it unique. And this is why you believe that this company will be able to grow compared to its competitors in size. And also, this is one thing that may or not be true, but does it have a diverse set of customers? Or on the flip side, does it have a loyal brand of customers or a loyal segment that continues to follow it no matter what? And so that's something you have to ask yourself. And also, one thing that's key and very important in a company is, does the company have strong management? And so this is such as manager salaries being dependent on how well the company does, basically through stock options and things like that. And so this is a key to really understanding, because the way a company is shaped, the way a company performs is based on the management and the management's decisions. And so you have to have faith and trust in the management of the company. And another question is, can current operations be maintained without large influxes of money? So can the company's current revenue streams be maintained without having costly investments or infusions of cash? And is the company reasonably priced? And so this goes into the PE ratio. And you also have to look at the company compared to the industry average. And again, if the company has a much lower PE ratio than the industry average, you have to think that the company is reasonably priced and is undervalued. And so for my example, I have Activision Blizzard. And so I have every question that I just told you guys. And this was my stock pitch competition in 2019. And so one thing you have to ask is, does the company itself have, so what does the company do? So I knew exactly what the company did. I knew that, yes, I know the company produces video games, and it produces a variety of video games, but I knew that. And so another thing, I understood where these monies come from. So I knew that the money made through video game sales and in-app purchases through these video games. And also, and then next, I had an idea, and I thought, does the company have a strong history of operating procedure? And yes, because the company was founded in 1990, it had numerous examples of surviving crisis, and it had a history of dealing with hardships, and it continuously posted strong year-over-year revenue growth every single year for the past 10 years. And so again, we knew that the company was growing. We knew it had strong operational procedure. And so we knew that was a plus, and we knew that made the company strong. And then we asked, does the company have favorable long-term business prospects? And so we said yes, because first off, the company was the leading game brand in esports, which placed it in a strong position to capitalize on exponential growth of esports gaming. And of course, we know that esports gaming is growing every year, and Activision Blizzard is at the forefront of that. So we knew that in the future, Activision would be able to capitalize on this future growth. The company was also gaining market share in China with mobile app games, which had the potential to lead to billions of dollars in increases in revenue. And so with the company just starting out in China in this huge video game market of over 1 billion people, we knew that the company had great favorable future prospects. And then we also had to talk about, does the company have a strong moat? And so for this, we could definitely say yes, because the company has some of the most valued and loyal video game franchises. Call of Duty is the second most valued video game franchise after Mario. So the company had one of the strongest and most loyal video game franchises in the history of video games that would allow it to continue to have strong revenue growth, even if there was potential failures in video game development in the future. And we also knew that the company had Candy Crush and World of Warcraft, other strong brands that allowed it to really gain a competitive advantage. And then we had to go with the question, does the company have a diverse set of customers? And so we said, yes, the company has video games on all platforms from PC, console, and mobile games that will have a diverse array of consumers. And then we have, does the company have strong management? And again, we had to go with yes, because the company's CEO, Activision, has been with Activision since 1991. And 8 out of the 10 board of directors on the company were independent and provided and that meant that the CEO did not have that much power over the company, and that allowed for a thorough review of all company decisions. And then we have, for our last two questions, can current operations be maintained without large influxes of money? And with that, we said yes, because of the company's current video games allowed it for current revenue to be sustained without having to have a large development or a new video game development in the future. And then most importantly, is this company reasonably priced? So at the time, Activision Blizzard's PE ratio of 19.2 was far below the industry average of 25. And the stock had dropped more than 50% over the past few months. And so again, with this complete set of investment thesis checklist, we were confident that this company would grow in the future. And so I believe we pitched the stock at $47. And after we pitched it, the company fell to $40, right? And so we were wondering, can this company still keep falling? Can this company still just continue falling, because it had fallen all the way from $100? And then you have to go, we went back to our investment thesis checklist and we were like, this company still has every single thing that we talked about. And now Activision Blizzard is currently sitting at $90. And so that is a strong investment thesis checklist. And so I will open it up for any questions that anyone has.
David, thanks so much for doing this lesson today. I love the way you put in your own investment checklist from your stock pitch competition. I think that was a great anecdotal analysis on your end. So thanks for that. Does anyone have any questions for David, either about the investment checklist or, stock pitching in general?
Yeah, also, if you guys have any questions, I know the stock pitch competition is coming up, and I've done that 2 years already. So I'm really happy.
All right, well, it doesn't look like anyone has anything. But thank you, David. That was amazing. I just want to remind everyone that next week is our last YIS Global Club meeting. We're going to be doing a stock pitch prep night to go over, last minute things that you guys need to know, tips and tricks on how to present, what the judges are looking for. We'll have one of our past winners, maybe even two past winners, be able to give you some tips. We also have some previous judges as well to give you some hints and tricks and see what you guys can gain from that. So, all right, you guys. Well, I will see you guys next week. Have a great rest of your week. Bye.